Yeah, good morning. Thank you so much, Jennifer's team and Sarah, for inviting me to today's session. I appreciate it. I've been an accountant in Ontario for 24 plus years. Um, I've worked every opportunity that I've had in gaining a lot of experience, whether it was a small accounting firm or Big Four. I worked for Ernst & Young. I worked for KPMG Law Legal Department as a senior tax manager, and I've also worked for Canada Revenue for 6 years as an appeals officer and as well as an auditor. An appeals officer basically looks at when a taxpayer is objecting the way the audit was conducted, and now has an opportunity to provide more documents. And I was the impartial review to be able to review what the auditor did, what the taxpayer is looking for, and making a decision, and then ask them to go through the judicial system, the Tax Court of Canada, if they wanted. So in 2014, I left Canada Revenue. I always had that entrepreneurship skills, and I wanted to be my own passive income, as opposed to me being somebody else's passive income. So I purchased Tax Partners, and thankfully, Tax Partners has been in Newmarket in York Region since 1982. I have 27 employees, and we do everything from accounting, tax, bookkeeping, payroll, helping update minute books from a legal perspective, helping people through expatriating, denouncing their U.S. citizenship, wills, helping them through retirement, estate planning. We do everything related to finance because it's not taught in school. So it's my opportunity to help so many people through different perspectives. So that's my background, and that's my firm's background as well.
So good.
So what I'm hearing here is you definitely have the knowledge and skills to teach us about everything this morning. That's a lot of experience, and especially with CRA, I think people hear those three letters and get a little panicked about everything.
I know, and it's the only government or body that can take your livelihood and everything away from you, right? So being there on the other side helps me understand and deliver expectations and objectives from individuals when they feel like they've been mistreated. I try to help them, make them feel better, help them through the process and stuff like that. There are a few people that are online today that can attest to that, and I'd be happy to share those.
Love it. So for this morning, you were going over some tips for us for, agent self-employed, ways for us to save taxes, and also touching on precs, right? Because I know a lot of people aren't quite as familiar with that.
That's right. So
do you need the screen share, Mahad?
If you don't mind, I just wanted to, or I can share my screen if you give me control.
Sure, you should have permission.
Okay, let me just share this. All right. Awesome. Can everybody see my screen?
We can.
Yes.
All right, perfect. So again, today's agenda that I just want to cover in the short time that I have is have you skim through these points, and if you have any questions, it's a free consultation appointment, so you can just make an appointment and I can elaborate any topic that you would like me to do. So today I just want to cover the agenda of tax filings and payment deadlines. That's important. What does having a PREC mean for you if you are thinking about it, or if you have a PREC or you're not sure what a PREC is supposed to do for you and why it should be effective. And then I will talk about retirement planning, because that's one of the biggest topics today. 78% of Canadians live paycheck to paycheck, and I try to help people see a bigger picture of their livelihood, so that way they don't have to work past 60. People say financial freedom is 55, but I think 55 to 60 would be a time where you should be able to reap all those benefits that you've worked so hard for. And then I'll just have some questions and answers period, and I'll share some of the fees that we charge. So the first thing that I just want to cover is the tax filings and payment deadlines. So as a realtor, back before 2020, you could only be a self-employed. So you would have to file personal taxes and business schedule, and the GST returns. But now, if you have a PREC, you're mandated to file a corporate tax return, personal taxes, which is a lot simpler, and the GST return will be filed by the corporation, by the PREC. The deadline for personal taxes is April 30th, and that's the famous deadline that everybody knows. But the GST return and the submission for the tax return could be extended to June 15, as long as you pay any amount that you owe. So the payment deadline is April 30th, but the filing deadline is June 15. I just wanted to show you that for both GST and personal taxes. So a lot of individuals, and back in October 2020, I did maybe 87 realtor brokerage presentations. And I have over 94 PRECs that I've incorporated across Ontario. You know, there are some cities that I never knew that existed in Ontario that people were contacting me from across the whole Ontario, because it was COVID and a lot of people were doing Zoom, and you know, I started just jumping on the bandwagon of Zoom and everybody started logging in. So what does having a PREC mean for you? You're basically creating a legal corporation treated as a separate entity. Your PREC must be an Ontario corporation, because under the Ontario Business Corporation Act, it needs to work well with OREA and RICO and stuff like that for your insurance. And as a realtor, you are the controlling registrant of the PREC, and you must be self-employed by a brokerage in order to make the PREC you know, work. And you must be registered with RICO as a salesperson or broker, and your brokerage must give you a written agreement. And the PREC will earn all the income, and it will pay it will pay different types of taxes other than personal. So for example, you will have to pay payroll taxes. Based on tax planning, you will pay the GST, of course. And then you also have the corporate taxes, which I will share on the next slide, how that makes a big impact on how you can get wealthy, just, you know, having a PREC. And distributing business income to your family members. So if you have a husband or children, you can do income sprinkling. And of course, right now, if I wanted to buy your business as self-employed, it'll be difficult to assess what your business is worth. However, if you have a PREC, I'm able to assess your income and your goodwill and be able to take advantage of the lifetime capital gain exemption. So essentially, you're selling your business without having to pay any capital gain taxes. I've helped you know, a few people do that already that wanted to transition the business to their children. I was telling them, why do you want to do it for free? Why don't you sell it, create a shareholder liability, receive money tax-free, and you can work with your daughter, and then that way that you don't have to pay taxes on those income. So I was able to create $100,000, $200,000, $300,000 of tax-free income for the realtor who's now retiring, transitioning the business to their children, to take advantage of that. And of course, you want to save money for retirement. So if you sell your PREC, you can convert your PREC to a holding company and do a lot of investments, whether you're buying real estate, investments and stuff like that. So while this slide is confusing, I'll just walk you through two rows. So let's look at if you're making $100,000, okay? So on here, let me just get my pen. So on here, if you're making $100,000 as a real estate agent, if you're self-employed, the total taxes that you'll pay is $28,376, plus the Canada Pension Plan, which is 5.95%. If you had a PREC and all the income stayed with your PREC, the total taxes is only 12.2%. So you can see that you're saving a little over half. And let's say if I did tax planning between dividends and payroll, you will pay more if you took every single penny from the PREC. However, if you only took 50% and the other 50% stayed with the PREC, for example, your cell phone should be paid by the PREC, your car expenses should be paid by the PREC, and all you're taking is 50% from the PREC, your total taxes that you'll pay in a dividend is $15,000, and then $18,000 if you're taking on a T4. So those are some plannings that I will do in order to help you save on taxes. Mind you, you can deduct more when you have a PREC as opposed to when you are self-employed. For example, if you want to get the new, I know every real estate agent now has to get health and dental benefit. Why not have it in your PREC? And you know, you can deduct it. If you're deducting it as your personal taxes, is only a credit. And when it's a credit, you only get 15% of it back. Now, the other thing that I will show you is that let's say that you have a fantastic year, which I hope that every realtor does every year. And let's say that you get to $400,000, okay? So if you're self-employed, you're paying 180%, sorry, 180,000. But if you are basically using a dividend structure, you're paying 1/4 of the total taxes. So that way that you're building more, and you can use that money to buy a property. You can use that money to buy different types of investment, whether it's mutual funds or a cottage or a car or anything that you want to collect it as a property. Now, before I show you this slide, I want to cover this slide first. So the old way and the new way. And the reason why I have the old way and the new way is that if you want to take a picture, now you don't go take your camera out anymore. What you use is your phone camera. If you want to send a fax or PDF or you want to play music, you don't go and pull up your CD or tape player. You pull up your phone, and that's how you do it. So one of the things that I often talk to people about is that, is your accountant up to date with tax changes? Well, number one, is your accountant be able to represent you if you get audited? Is your accountant does he know everything about you? Because knowing everything about you and your family helps me make those decisions properly for you. And those decisions might be having a will. I have a trust and estate practitioner license. I've done so many wills for so many people. Luckily, and I'm not saying that it's a good or bad thing. Since for 9 years that I've had this business, I've been an executive 4 times for clients where there's been dispute, and I've been assigned as the executor, the date of death return, all those kind of stuff. So you have to assess if your accountant or your bookkeeper or whoever the person are, or even if you're doing yourself, if you have all the tools that you need in order for you to be able to make better decisions. So the reason why now I'm going back to the slide is that I want you to assess your retirement plan. Being a real estate agent, I had the other day a 71-year-old realtor still working. And I was like, why are you still working? And she said, I never planned for retirement properly. So I've had so many ups and downs, and now I'm forced to work to be able to pay all these debts. So here's some things that I want you to know. So at the age of 65, we work so hard. At the age of 65, the government, Canada Pension Plan, an average realtor makes about $580 a month. And then an average old age security, which is the maximum at the moment that you would be entitled to, is $691. So your monthly payment is $1,271. Now, in today's market, or even let's say if you are 40 and you have another 15 more years, where does life look like if you're getting $1,271? So you have to be able to assess and say, okay, should I, eat bread and butter every day in order to have a better retirement? Or should I start, working hard now that I'm healthier and be able to make ends meet later on and be able to enjoy all these dreams that I have? So why shrink your dreams because of the 1,271? Why not increase and keep those dreams, but increase your income in order to meet those things that you want for your own retirement? So at the age of 71, if you have an RRSPs, which a lot of realtors do, based on Stats Canada that I obtained last week, self-employment individuals payment is about $820. So you take the 1,271 plus the 820, that's about $2,000. It's not even enough to pay rent. So what are you going to eat? What are you going to take care of your medication? Where are you going to travel to? So how much are you saving? Or even if you're saving, what are you doing with those investments, right? So having a good financial advisor is a good thing, but a financial advisor has a label behind them that they will sell a product. A lot of times what they do is that, a lot of individuals come to me and say, Mahad, this is what my financial advisor is recommending. What's your view? Because for me, I look at it from a tax standpoint. I don't look at it from buying mutual funds. Like, if you buy stocks, you pay only 50% of your capital gains tax. Real estate property, which is I'm a big fan of. Personally, myself, I have 9 properties. That's a way for retirement. I don't see buying stocks as a way of retirement. I see buying real estate properties as a retirement. The other thing that I also wanted to touch on is, having a proper insurance that if life is short, your family is taken care of. And if life is long, you can turn it into an infinite banking. Jim Pattison did it. Ray Kroc from McDonald's did it. You see so many McDonald's every day. And then, Walt Disney did it. That's why Disneyland exists. So what they were able to do, I'm sharing my own policy. Jake would say, I shared this with him, and Jake could be a testament to it, when I was explaining it to him. So for example, if you have life insurance, I'm hoping everybody should have a life insurance. Let's say the death benefit is $750,000, and I decided to pay $1,000 a month for 20 years. The total amount of premium is costing me $240,000. Why this is important as a business owner is that if I'm contributing from the age 42 all the way to 61, then there's no more payments after that. It's a permanent insurance policy that I only pay for the first 20 years, and then after that, I'm done. And this cash value is very important. So after 20 years, if I put in $240,000, the insurance company is allowing me to take a loan up to $569,000, 65% of it, which is a lot more than the $240,000. So now I'm 61. I want to pay off my debt. I don't want to work anymore. I have the opportunity to be able to use the cash value. But meanwhile, while I'm contributing to all this is tax deductible, the $12,000, because it qualifies for an opportunity for you to be able to utilize it effectively in terms of a part of a tax planning. So in doing that, even let's say if I decided not to do it, not to take the cash value, and I want to use it as a retirement option, at the age of 67, the insurance company is allowing me to be able to receive a loan against my death benefit. So if my death benefit at 67 is 1.6 million, every year until I die, I will receive $92,000. And this is tax-free. This here is tax-free. Why? Because it comes in a form of a loan. Okay, so when you're receiving a loan from anyone, you don't pay taxes on a loan. Basically, you're borrowing against your own death benefit. So why leave it to the next generation? You can access it and supplement your Canada pension, old age security, and your RIF. All of a sudden, you're receiving the same income as more than a teacher, more than a firefighter, more than a government employee, because what you've done is that the first 20 years you planted the seed of having all this, and then later on you're reaping the benefit every year until you die. Life is long for Canadians. Like the average date of death for male is 86, and the life expectancy for a female is 89. So how are you planning in order to live that long and sustain all these expenses that you have every day? And the last point that I just want to touch base on our agenda is our fees and what we charge, because it's fair for everybody to ask, and I'm very transparent when it comes to fees. So if you're self-employed, that means CPP calculations, personal, business, HST is $495 per return. It's a flat rate that includes the bookkeeping. But if you want us to sort all the receipts and go through everything, the bookkeeping is $80 per hour. And if you have a PREC, the corporate tax return is $1,100. The financial statements and the GST return and the T4 or T5 slip, depending on how much money you take from the corporation. That's the end. So if anybody has any questions, I'd be happy to take it. Again, my contact information is here. I told Jennifer that I would do a free consultation for anybody that wants to talk private and be able to answer their questions.
Amazing. I think we all are just kind of wrapping our head around this. Courtney, I saw your hand go up first. What's your question?
You know how you're talking about on the PREC about being able to pay your children? Are you allowed to do that when you're self-employed? Isn't there like an amount you can do if you're self-employed as well?
Yeah, so if you're self-employed, is very tricky. You need to show job description. But if you have a PREC, you don't have to show a job description. The maximum that you're allowed if you're self-employed is $2,000, and that child must be over the age of 13.
Oh, all right. Thank you.
And Angelique, you have a question.
Yeah, I was just curious as to what do you charge in terms of a cost to set up a PREC?
That's a good question. Thank you for that. To set up a PREC, which includes the articles of incorporation, the GST, the payroll, the minute book, the REA requirements, it's $1,650 plus HST. And that includes the controlling person. And if you're adding your husband or or other, then there would be a non-controlling person, and we would do all those structuring as well.
Great, thank you.
Anna.
I have a couple questions. If let's say well, we've been using the same account for years, and obviously they have that information, right? That keeps them year to year, and decide to switch to your company. So how does it work? Like, do you contact the accountant, or how does it work?
That's another good question. Thank you for that, Anna. So technology has made it easy today. So if you hire tax partners, I'm able to obtain all the information from Canada Revenue for the last 15 years. And I'm able to see the trend and be able to guide you through what has happened, what was missed in the past opportunities of filing tax returns, and how we can structure it better. A lot of times people come to me and they say, I'm happy with my accountant, but I'm not getting more, and our firm, when somebody sends us an email, we have a policy to get back to them within 48 hours. So sometimes you would send an email and you would get lost, and you have to do multiple follow-ups. And that's something that I've made a difference in my firm in being creative and being different.
So speaking about bookkeeping and preparing the taxes, you charge by hour or the piece of work?
If you're self-employed, we just have a flat rate, $495. If you have a corporation and we have to do the bookkeeping, it's $80 per hour.
Okay. And thank you very much. I did not understand correctly about the life insurance that we're paying. So like if you're paying already for 20 years, you can do something, or like, can we use it? Because I'm actually already getting to the age of 67. So I think I don't have those 20 years like you mentioned.
Yeah, I mean, there's multiple options. There's multiple, like the life insurance that I specialize is for retirement of a business owner. I only talk about business owner life insurance. I don't talk about what everyday person sells or what everyday person would offer you. Term insurance is the worst type of product if you have it, because my definition of a term insurance, it terminates. And when you're on a fixed budget at your age, then the premium is like $3,000 a month. What are you going to do first? Are you going to eat, or are you going to pay a term insurance? And everybody terminates that term insurance. But the insurance that I would chat with you at your age would be a lot different than what I'm sharing today. But at the same time, I want to make sure that your liabilities and your family is taken care of.
Basically, I see. So like we should set a separate appointment, right?
Right. Everybody's different. So not what I have would apply to you.
Jake, you have a question.
Yeah, I just got two things. One thing I just wanted to say, as Mahad referenced, he's my guy. I've used him for, I think, 5-6 years now. And he always is there to answer my questions. Love this guy. The one thing I did want to ask though, for the PREC, at what income threshold does it make sense to transition from self-employed to a PREC? Is there a certain point where it makes more sense, like the cost outweighs the benefit?
Right. So going to this slide, what I like and hate about realtors is that income is up and down, right? So in 1 year, you might have a low income, let's say $50,000. Another year, you would have $400,000 of income. So my view is, look, so take 5 things. Those 5 things are food that you eat every day, clothing, medication, shelter, and children. Add those up. What does that cost you every month? If let's say that costs you every month for the whole year $45,000, then if you are making less than 100,000, then don't have a PREC. So just remember to take those 5 things. But if you're making those 5 things costing you $45,000 per year, and at the same time you're making about 150,000, then it makes sense to have a prec. And the reason why it makes sense to have a prec is that you start off small, and then as you get older and you start having more and more income, and then you start transitioning other people that are retiring and partnerships and referrals and whatever, your income, then prec makes more and more sense. I've had people that are police officers and they're real estate agent part-time, and they're asking me, look, I only make $50,000 as a real estate agent. And I would tell them, look, you're making over 100,000 as a police officer, have a prec. That way that, your prec can pay for all your business expenses. And then, you have a T4 income and you're reducing that income. So I've done that for a lot of people. Everybody's situation is different. And I would learn about you in order to help you make that decision easier.
So
Awesome,
it's
thank
not
you.
about necessarily the amounts are relative. So it's based on what you're earning versus what those expenses are that you can't deduct from the prec. And when that reaches a certain balance, that's where it makes sense to create one of these.
That's right. And the tax rate at a corporation is 12.2%, where personal taxes on 50,000 is about 27%. So there's a lot of savings. And, Jake, I appreciate you asking that question. That's one of the most common questions that people ask.
Do we have any other questions, guys, before we let Mahad go this morning? No, so if anybody comes up with questions, I'm sure we're all going to end the call and think of 5 things we wanted to ask. Again, reach out to tax partners. Obviously, again, this gentleman knows what he's doing and has the experience in all aspects to back it up. So if you want more information or your personal situation, it's best to talk to somebody directly and see what makes sense for you.
I have one last question.
Yeah.
One last question to Jake. Why were you hiding him for 5 years from us?
I haven't. I've given Mahad's name to lots of people. I love Mahad. I preach his name to everybody. He's been, like I said, he's been doing my taxes for I think 6 years now, 5-6 years, and I always ask a lot of questions, and he always answers them. Yeah,
and thank you, Jake, for that. And Anna, it's never too late, right? So every day you learn something. In adding to what Jake is saying, there are times where people that I've never heard of that are not customers, they would send me an email and they would say, oh, I have a client who's buying a land. What are the HST implications? The most recent one, the underused housing, tax return for corporations that own properties and is being rented to residentials. People were asking me a lot of questions, and those are people that I've did a presentation back in 2020. I was like, oh my goodness, I don't recall this person ever, So I have a lot of knowledge. One of the things that I used to do as a CRA auditor when I was there was audit a lot of real estate agents because, their income and expenses, their expenses are somewhat the same, but their income is up and down. And those are the kind of ratios that I used to look at. And that's something that I enjoy. And that's something that I do right now in helping and explaining to people how I can keep them out of trouble and make sure that they are learning, not just here, drop off your papers and I finished, and give it back to them. My brother and I, we always fight because he's a brain surgeon and he tells me that, I see results right away. You give a client a folder, I don't even know if they look at it or they know what they're looking at. So those are the kind of things that we fight about. But, I'm happy to share and help you go through all those journeys.
We thank you so much for taking time out of your Friday morning and sharing all of this with us. Thank you again, Mahad, so much. And again, guys, reach out to tax partners if you have more questions.
Thank you.
Have an awesome Friday and thank everybody again.
So great.
Yeah. Take care. Bye.
Take care.
Thank
Bye-bye.
you.
Bye.
Bye.